Gautam Trivedi joins us. Let's take our conversation forward. Gautam, good to have you back.
Hi, good morning.
What is in store for the market now? I mean, we are underperforming global markets, FIs are selling, earnings are getting downgraded. Are we in for a tough year ahead?
I think we are definitely in for a tougher year ahead than what we've seen over the past 3 years. And I think it's about time we had some toughness in the market because valuations are still pretty stretched. We've seen pockets of correction, but the fact is overall valuations over the past 3 to 4 years have moved up significantly. And I think the good news is at least there's been supply that's been coming every week on week. It's a bit like a Bollywood movie supply that's been coming week on week. So that's absorbing the flows that are coming in from domestic investors. But the reality is, I think if you look at the year ahead, and especially with respect to foreign participation, my personal view is it's going to be not easy to bring back the foreigners. And the reason, of course, is not just the valuation, but the fact is back home, and I mean the United States, which is where almost 2/3 of our capital for foreign investors comes from, either directly or through India dedicated funds, offshore India dedicated funds. What I find is that the domestic US economy is still very resilient. Of course, a lot will play out once President Trump takes office, and we'll see what the first couple of months of his actions are. But having said that, if you look at the performance of the S&P 500 in 2023 calendar year, it was up 26%. Last year was 25%. 2 consecutive years of 20+% percentage returns. Now, given that situation, and we, as in the Nifty, was up only 7.5% in calendar 2024. So given that variance in performance, it's a difficult trade to put money into emerging markets at this point if you're a foreign institutional investor.
Okay. How long will this welcome back Trump rally continue?
Sorry.
No, my question is that this welcome back Trump rally, America is going to be great. That template is the reason why dollar is strengthening and why US markets are outperforming. But there would be a climax to it, right? How long do you think this welcome back Trump rally will continue?
It's a very good question. I don't think anybody has an answer because, like I said, the first few months and his actions and how practical are some of these actions, because at one breath, he wants to raise tariffs and punish countries that are having higher tariffs and walls with respect to US exports into those markets. At the same time, he wants to bring down inflation, which he seems to be wanting to do by bringing down the price of oil. So I think a lot is going to play out between February and March to get a sense of how realistic are his ambitions and how will he actually implement them. So there will be opportunities, I think, for Indian companies within all of that, but it's way too early to say what he's going to actually do.
The assumption is that Trump is going to go easy on tariffs. It is not going to be such a high tariff environment. Then could that lead to a rally back into emerging markets?
The other thing that does need to happen is that the currencies across EMs and including India, of course, have to stop falling because foreigners basically go on pause mode or even sometimes sell mode when they see the currencies vulnerable. So my view is that until we don't see the rupee bottoming out, whether it's 86.5, 87, I don't know where it stops. But the reality is to attract foreign money, the currency needs to stop falling.
Okay, so that's a take coming in as far as United States and the global setup is concerned. But just back home, do you anticipate that it's the year that you should just stick with large caps and quality names and don't try and make that quick money that we were used to seeing sort of in the small cap and the mid cap, segments?
That's a debate that's been ongoing for the past about 6 months or so, especially in October when foreigners sold as much as $15 billion of Indian equity. So my view is that there is no right answer to it. There will be stocks that even in the mid-cap space will actually do very well. So I don't think sticking only to large caps may be a great idea in 2025.
So Gautam, sectorally, what are the themes that you're working with right now? What do you think is going to work in 2025 and what is it that needs to be avoided, maybe because of growth or even valuations?
So my view is travel and tourism continues to be strong. It's been great for the past 2 years. And I think if you just look at the November numbers, I was looking at the ARRs for the average hotel industry, they're up 11% year on year. RevPAR up 23%, occupancy at 70%. And if you just look at even Indian hotels, which is obviously the largest hotel company in India, Puneet Chatwal's done such a phenomenal job. I mean, he's opening a new hotel every fortnight for this fiscal year. 25% of the new keys that are coming up are in tier 1 towns, and 44% are in tier 3 and tier 4 towns. So this tells you the penetration of tourism. It's not limited only to the big cities or the usual Agra or Rajasthan, but it's actually percolating down to smaller towns. So I think tourism is definitely a big bet. Real estate, I think, has still a couple of more years of legs left in them. And my view is that as we get closer to a 5-year cycle of the real estate sector of real estate development, where people would actually get keys and move into their apartments, you will see a big spurt coming in everything that a new home needs, starting from furniture to paints to new cars, kitchen appliances, etc. So I think that will end up helping some resumption of consumption across various sectors that are linked to real estate. The other area which I think is going to be a big focus is going to be power. And at the heart of the entire power demand actually is AI. So besides the overall electrification, which a developing country like India needs anyway, AI is now the new paradigm, which is guzzling a lot of power consumption. So an AI search consumes, as you know, 10 times more power than a simple Google search. An AI image search consumes 50 times more power than a Google search. So when you start adding all this up, and 700 to 800 million smartphones out there, if people stop using or reduce search queries on Google and actually go to AI, think of all the power that's going to be needed to complete that query. In fact, I reprimanded my son the other day, my older son, when I asked him to search for something, and he went to ChatGPT versus Google, and I said, "Look, you just ended up wasting so much energy on completing that search." So I think power is going to be a big theme for the next several years, including 2025.
Gautam, everyone is bullish on financials. Everyone's bullish on financials.
Yeah.
But it is not moving. Why is that?
My view is that people are looking at financials from a valuation, and the fact that it's been dead money for the past 2 to 3 years. A lot of the big name private sector banks have done nothing for 3 years in a row. But I am still not fully convinced that now is a good time to put money in financials. System credit growth is down to 11%, which was about 13% in the second quarter. I don't see any major NIM expansion anytime soon. Unsecured retail lending is still a major issue, which includes MFI. And a lot of the private sector capex, which hasn't really taken off, but whatever has taken off is largely being funded by equity issuance, internal accruals, and a lot of the larger groups are taking foreign debt. So that credit growth, I don't see it necessarily coming back in a hurry. And if that's not going to come back, just looking at mere valuations to buy a sector or stocks, I don't think it's a good idea.
So that's a view coming in positive when it comes to tourism, positive when it comes to real estate. Power, of course, has been that multi-year theme as well, which continues to work out well. But you were talking about how some of the export-facing companies might just see opportunity with what's happening in the United States. With that context in mind, what's the view on IT and pharma?
So I think pharma should be a positive. I mean, if you want to bring down, as President Trump has said, inflation, it can't be limited only to groceries. It's got to be also to medicines. And medicines, as we all know, when we all travel to the States, we pack up our medicines from India and take them there because the cost of the same medicine is 10 to 20x in the United States. So Will the president end up spending, lowering tariffs specifically for medicines? If I was in issues, I would do that because the cost of healthcare is exorbitant in the United States. So that's definitely one of his campaign promises. IT, I think, is way too early. I would love to see IT return because, again, another sector for the last 2.5 to 3 years has been quiet. It's picked up in the past 6 months, but in the hope that business will resume. But I think the question is, how is AI going to impact Indian IT? And question is AI, has the AI hype run ahead of reality? So hopefully over the next 2 to 3 years, we will see what exactly is AI going to be able to deliver profitably, and how those applications are going to be useful to boost productivity. So it's very early, but I think valuation comfort is there for IT. So if somebody wants to take a call, I think now might be a good time.
The renewable energy theme, Gautam, because that also turned out to be quite the fad in the market, structural as it may be. Do you think the timing is right? And now there are opportunities enough over there?
So, the other thing which Indian IT started doing, which has been very interesting, and they've been sort of quiet about it, is the fact that the whole GCC phenomenon in India, which the whole world is looking at, frankly, you've seen a lot of the major US and European companies set up GCCs in India, but the smaller and mid-sized GCCs are actually outsourcing their own GCCs in India to Indian IT companies who are well equipped to actually manage and staff those GCCs. So I think that could potentially become a very big opportunity. A lot of the companies we've spoken to don't share how big that is or how big that was 5 years ago and how big that is as a percentage of revenues today. But I think that is a clear opportunity for Indian IT.
Are you buying data centers? Are you buying companies which essentially will be giving energy or clean energy to data center?
Yes, we are. We have exposure to some of the renewable companies, and I think that is, going forward, going to be a very important element for us to focus on. I mean, if you just look at the overall data center usage over the past 15 years, data usage rather has increased 100x. More data has been created in the past 3 years than ever before in history. So when you run an AI search, think of where all it's going at this literally the speed of light to deliver that the results to you in the next 3 to 4 seconds, and it consumes a lot of power. So my view is that getting back to what AI is doing with respect to power and the whole ecosystem around power, whether it's transformers, whether it is renewable. I mean, the source of energy really is going to be material. The fact is, yes, if it's green, a lot of companies would like to stick to green energy, but I don't think it's coming up fast enough. So thermal is going to be still an important element of delivering and creating power.
Power clearly is a theme. One way or the other, the demand is going to go up. But what about this entire disruption in consumption and the way people are consuming with the quick commerce disruption as well? Now, the stock prices, the likes of Zomato, Swiggy have run up. Have you been looking at these companies? Do you own them or looking at owning them?
We already own Zomato, so full disclosure there. But my view is that we did own some of the QSR companies when we realized that Zomato actually is opening up, not just 1 or 2 QSR items on the menu, but 500 restaurants you can certainly order from. It completely has changed the dynamics. Of course, Jubi's numbers yesterday were, a pleasant surprise in terms of their same-store sales growth. But my view is that Zomato, Swiggy, these are companies that will continue to flourish. They're pretty much a duopoly at this point, unless a third player comes up. The quick commerce phenomenon, I think, is interesting at this point. It's burning money. It's not necessarily growing the pie. It's eating the pie from the Kirana stores and to some extent from the e-commerce companies. The interesting part is what exactly is driving, and the question really is, what's exactly driving? Are people becoming more impatient that they want a product delivered in 15 minutes or 10 minutes? I can't imagine myself eating food that is delivered to me in 10 minutes. So, I mean, I'm not comfortable eating that. I know people who've tried that and the food wasn't very good because you can't possibly cook it and deliver it in such a short time. But there are pockets of opportunity for quick commerce. The way quick commerce is mushrooming, we'll end up eating a bigger slice of the Kirana stores. I mean, it's a matter of time before that happens. So it's here to stay, whether you like it or not. The economics, I'm not fully sure with. But just one other thing on retail, which I must mention. While we've seen urban retail clearly struggle, and there's an article in your own newspaper, the Economic Times, yesterday about how some of the bigger brands like H&M, Zara, etc., are looking at 50 to 70% discounts. Interestingly, the semi-urban players, which is value retail, if you see the numbers coming out from Vishal Megamart, V2, V-Mart, I mean, they're spectacular, double-digit same-store sales growth, whereas urban India seems to be in a completely different zone. So I think the value retail is still going to continue to do well into 2025. And I'm talking of the sub-Zudio, not even at the Zudio level, which is about an ASP of 500 rupees for a shirt, but looking at 300, 350 rupees ASPs for shirts. So that's the benchmark I'm using.
Okay. So how many shirts you've been buying, since you're using the shirt analogy as an example?
Sorry, can you repeat that?
No, since you're using the benchmark as to where the white shirts are moving.
You mean the one I'm wearing right now? Is that the question?
No, I'm saying it's good and nice to talk about urban consumption, luxury consumption, but there is a retail consumption which has slowed down. And if there is an early evidence of anything turning around for the rural consumption, could this year be the year where you could see a comeback in the HULs and the Nestlés and the Britannias of the world?
I think to some extent, yes. But let's not forget, merely looking at volume numbers for the big FMCG companies, is that the right way to look at consumption's revival? And if you look at the absolute number of D2C brands that are actually eating into market share, a lot of those brands individually may be small in terms of market share, but when you add these up, in every product category, you have D2C brands that didn't exist 3 years ago, 4 years ago. And I think that's starting to certainly impact whether it's cosmetics, whether it's food items, whether it's cereals, everywhere, including, of course, you've seen in soaps and shampoos, D2C brands emerge that are available now even on quick commerce platforms. So I think if you were to look at that collectively, maybe the answer is different from just looking at the listed companies' numbers.
Taken. So that's the latest coming in. Thanks so much, Gautam, for making time and speaking with us. You said 2025 is going to be a bit of a difficult year, but let's hope it's as easy as it could be.
If you like this video, then like, share and subscribe to ET Now.